You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams. And we're going to talk about OCR. That was supposed to be like a snapshot of what to expect, guys. But OCR, there's nothing else to add. James, hello.
Kia ora.
You were going to say hello, huh?
I was going to say hello, but I'd said that on the previous one. So
That's okay. You obviously were a little bit busy. For those that don't know, go back and listen to an episode we just did with James. James was a little bit out of action for the last few months. I think you did come in at some point.
I did. I felt like a week or 2 weeks ago it would have been popped in.
But that's okay. OCR, what do you reckon?
Okay, so caught up on a few of my cool little property and investing podcasts over the last few days. And, as folks might have heard, the OCR has dropped another 0.25%. So that generally means it's good for, more people looking to get a mortgage. But what we have noticed is this time around the banks haven't dropped their interest rates quite as much. So,
Why is that? Why the banks are not dropping? I'm getting messages every day from clients asking, should they fix now or should they wait a little bit longer?
I think the banks have all seen this coming for quite a long time. And so what they tend to do is they get out in front of, they've got economists, probably teams of economists working away on this. And so they know that the OCR has been dropped and it's going to be dropped. And they're lowering their interest rates well in advance of those OCR drops. So we've probably seen the lowest, unless something really bizarrely goes wrong, like globally. New Zealand is turning around economically. So the lowest interest rates of OCR, that's probably the last OCR. It might stay nice and low for a while at about 2.5%, we hope. So what we are beginning to think is it's a great time to jump in there, which it has been for a while. Like I've just done a long-term rate for 5 years. Well, one of my clients is locked in a 5-year rate at 5%.
Yeah, 4.99.
Yeah, absolutely. So that is really good. If you think historically, what you've seen over the last 20 or 30 years for a 5-year rate, other than that real COVID where you could do a 3%.
Yeah.
Try not to compare your rates with then. That was a real weird anomaly. It's just you're not going to see that again.
And I think that's the trouble, right? A lot of younger people, I know older people actually fine with 4.99 for 5 years, but I think a lot of younger people that have had a mortgage since COVID, they're under assumption that we might see those 2.99 come back and they're just hanging out for that.
Yeah.
But I don't think it's going to happen.
No. If you've been for a few market cycles, say from the late 1990s, .com, global financial crisis, and then COVID, I suppose, was the global financial crisis and COVID were the two big ones in recent memory. So, they don't come along that often. Like normal economic cycles, the interest rate, it's just like today. Today's the low point.
So what we normally recommend to people is do not heavily rely on OCR reviews, although they have been linked closely to the drop of the rates. The banks actually have their own wholesale rates that they rely on. And if you are thinking that, you would like to budget better, etc., then booking in a 5-year rate is probably a good plan. If you're not planning to sell your house or do anything that will require breaking that rate, 3 to 5 years is actually a good term.
Yeah.
At 4.99.
Yeah.
But we also see shorter rates sitting at quite a good
Yeah, they are over
range.
4.5 or below for 2 years or something.
Yeah, 4.45.
I actually had a client, I think, had 4% for 2 years.
Wow.
One of the...
Well, you're thinking first-home buyers. So for the first-home buyers, we actually still have that awesome deal, which is 3.99 for 1 year or 2 years.
Yeah.
And if I was a first-home buyer, I'll be jumping at that.
That was... I just couldn't believe that. I understood the 1 year, but seeing that you could do it for 2 years, that was just...
Yeah.
I wish I could do that.
I know, same. But unfortunately, this offer is only for the first-time buyers. So in terms of OCR looking into the next year, do you reckon there will be further drops?
No, I don't think there will be any further OCR drops. And, I'm not an economist, although that would be pretty cool, which is a pretty sad thing to say. But yeah, things are picking up. And so basically the Reserve Bank I don't think you'll see them dropping the OCR any further because they've got to monitor inflation. If they drop it too much, inflation will pick up again, and then they'll have to start lifting it. But generally, from what I can understand from the podcasts that I also listen to from various economists, is that we will probably see the OCR just hold for sort of the medium term. Possibly the next move would be up. It's probably more likely later next year, mid to late next year.
Yeah. So if I was you, and if my loan is coming up for renewal, I'll be looking at what can I do to future-proof myself from the increases.
And now is just the coolest of time. Because property prices in Auckland and Wellington are still, they haven't really moved at all. And so if you're in those areas, or it's just a great time to be a first home buyer. The property prices are low compared to 2 or 3 years ago.
Yeah.
It's probably not far off what you're paying in rent. Interest rates are really historically phenomenally low. And the only thing you've got to really account for is the rates and, your property insurance, which will just pop up the costs a wee bit for your house expenses. But that's really the only difference. And it's just a bit of an investment of your time. How many inquiries do we get of people that are really in a great position to get a first home, but don't do anything?
Yeah.
And we can only do so much. So it's really about, we can help you as much as we can, but you've got to do a bit of work yourself.
Yeah.
I don't know how that comes across, but
the ball is in your court as well. And I think the trouble here is we're fighting against media, right? We're fighting against media. We're fighting against Uncle Bob and neighbors, where they say to the young ones, "Oh, don't buy a house; it's a trap," and you're better off paying rent, because when you pay rent, you don't need to worry about rates and insurances.
Yeah.
But the thing is with that, and I was doing some math with my clients, is they're paying more in rent than they're paying in mortgage. And the way I see it is, at least if you're paying towards your own mortgage, you can always sell the house and recover that cash, versus that cash, if you're paying rent, disappears. You're paying into the black hole and you can't get that cash back. You don't have an asset that appreciates with time. And by appreciates, I mean you're appreciating the house, but the house appreciates itself.
Yeah, absolutely. It's a compulsory savings scheme. You got your KiwiSaver, but by paying your mortgage, you're really putting aside that money into an invest. It's kind of an investment, because in the future, when you retire or whatever, you're not going to have to pay rent. So if you'd I think it's important to build that equity up, pay that mortgage off, and then you've got a rent-free place to live.
But also, if you think about it, like by the time you retire, where else are you going to save 500,000 to $1 million, right, worth of asset? So even if you wanted to sell the house when you retire and go on a Caribbean cruise or on a cruise liner for the rest of your life, if that means 20 years of cruising around, you will have enough money to do that if you sell a house.
Yep.
If it's mortgage free.
It's phenomenal what the value of those are.
Yeah.
Like,
because a lot of people I know, that's what they choose to do. They want to go on a cruise, and this is how they want to die. They just go, oh, well, I'm going to go around. The cruises have all the food included. I can just meet all sorts of new people, all new places to see.
That day and night.
Yeah, and there's medical help on board, and
hopefully,
hopefully, but they don't care. They're like, well, I'm 80.
That would be pretty cool. I mean, and you can even choose ones that they don't allow kids on. I know some people go for that.
Yes,
so that can be important for some people.
So the way I see it is that the house in the future gives you freedom.
Yeah,
and even if you have fantastic children and you want to go and move with your kids, you could always sell that house and go move with your kids and build something maybe at the back of their section. And that's what we see as well, right?
That multi-generational living is becoming a real theme. So if you can, if you're looking at a property in that regard, do think about those things. And
so it's not what about right now, it's about what about in the future.
Yep.
Your future self will thank you for it.
I'll tell you one thing that was really helpful for me when I bought a property when I was quite young, and before we had kids, we we paid that mortgage off as quick as we could, or as much as we could. But what that allowed us to do is when we did have kids, we were able to actually relax a little bit, draw down on the equity on that property.
Yeah.
And it got us through a tight spot. Whereas I wouldn't have saved that money. So it gives you options.
And that's what we see, right? A lot of people choose to have kids a little bit later because they want to be in a stronger financial position. But I mean, for us, when we bought our first home and then we had our kid shortly after, I think he was born maybe a year or 2 years later, and after we bought a house. So that put a huge strain on us. And I had to come back to work really early because I had to pay that mortgage. So yeah, whatever you did with Rebecca really was much cleverer than what I did. So, James, thank you so much. That was your quick OCR update and interest rates outlook for the next year. And if you guys have any questions or topics you want us to cover, please let us know. Thank you so much.
Cool.
And that's a wrap on That Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.